Right, it's been a little bit. It was the middle of the summer holidays for me, I think, or thereabouts, when I couldn't take any more punishments in silver, and got out and transferred the remnants of the money in my trading account back into my regular bank account, and gave it up for the duration until I was ready to refund and go again. Well, guess what? Refunded, ready to go again. And you think I might have learned my lesson? After all, I was talking about abandoning silver for good, but I don't know whether it was this plunge here specifically that destroyed me the most, or maybe I think I was out and gave up. It was either this plunge or this mini plunge here, this retracement. But anyway, I've been out of it for a bit, and I got back in just the other day. And where did I get in? In this purple box, resistance becoming support here. I'm a buyer. I bought down here, and I have a couple of positions, and I got another one in on a. It's not really a pullback. I don't know if this counts as a pullback, but I got in again about here, 24.70 something. So just like a little bit down from 24.88. Sort of halfway between there and the low here at 24.66. So somewhere in the middle over here, I've got another long position, and I'm absolutely cock-a-hoop deliriously happy with it. I've got my concerns. I mean, I've moved my stops up to sensible levels. You know, my stops are around this resistance becoming potentially in the future support, where I could buy in again anyway. If we come down here, I mean, if this is the start of anything really remarkable, that won't happen. It may happen anyway, and then we may see something remarkable anyway. Who's to say? But in any case, I've locked in a good amount. I'll be happy with, and yeah, exciting times for silver. I mean, are we going to finally see movement? I mean, there we are on the weekly, and you might say, well, you know, we're just retesting this area here from the underside. That's not necessarily a very good. By the same token, it may be very good. It may be very good indeed. Yeah, but you got to think maybe just because you've had two strong candles in succession doesn't mean anything. You know, here's two strong candles in succession. We consolidate and go down. Yeah. Here's a nice big candle near a top. Here's two strong candles in a row, and it's a top. So just having two strong candles in a row doesn't really mean much. It's not an excessive move. This is quite an excessive move. Well, having said that, we've never come back to this area. So, yeah, overcoming this area on the weekly is going to be important, and then you can see the next level we're going to be looking to is $26 and a bit. And then anywhere between $28 and $32, especially if we start reaching above these highs here, you've got to be looking at, you know, will people be selling? Will they be selling only to reaccumulate on any whole pullback, or will it be sort of another revisit to the 29.30 level at the top of range, and then, you know, more grinding, depressing action, perhaps back into mid-range? Or there's any number of scenarios, but let's look at the daily. And we are, you know, we could potentially be becoming overbought even, in the short term. You can see on the daily that's a bigger candle. And we had a big candle here, small candle, turn around, big candle here, series of small candles, big candle here, series of small candles. That's a pretty big candle. So we may faff around, we may fanny around for the next week, the next 2 weeks. Even if we are going to continue up at some point, but I'm in it, and I'm hoping to stay in it for further upside. You can see on closing price on the daily we had a divergence. Momentum went green on my 18 period before it went green on the 18 period for price. They're both green now, and we're above. We held above, we broke through this downward sloping resistance, The market will do what it wants, but on paper at least, it looks quite good. It looks quite good. What else looked good? I mean, I'm not in it, but I called this on Twitter. I put a chart on Twitter exactly when uranium came into this purple box, and I said, boy, uranium looks good here. And then, I mean, look at this. I couldn't be in that trade, unfortunately, but, you know, I was complaining before about how I was calling decent moves in Bitcoin and treasuries and all these other things and screwing up horrendously in silver. That was another one I wasn't there for, but I'm not upset. I'm not upset. Because I wouldn't have had the margin to trade it anyway, you know. Wow. On close, we closed 38% higher. Now that's lovely, isn't it? That's really lovely. But I've made some changes to my charts because I've decided I need to try and be firmer with and have simpler, firmer reasons for taking trades. Because I've decided, or I've learned really, that there's only two trades to take. There's the trend trade that you take because you assume a trend is going on, and it is an assumption. It is an assumption you're operating on, because, you know, trends end when they want, not when you want. There's the trend trade where you're trading with what you presume to be a more sort of general direction. And there's a value trend where price comes into an extreme of value or a pocket of value or whatever you want, and then like your risk will be, you know, however you assess the area's importance, really. You know, if it's just like a shorter term value area where price reaches a new low or a new high, then maybe go in a bit lighter. But if you think it's like a significant daily or weekly area of value, high or low, or retracement or whatever, then you could go in more. So the system I'm going to be working on now, or operating on now, is I've got a sort of a short-term colour change moving average, which is an 18 period simple, red for down, green for up, and I've got a 33 period yellow gimmick. You know, when the short, but as you would expect, there's a number of signals it gives. When the short-term moving average is above the long-term moving average, especially if it's green, you're presumptively going up. When the opposite is the case, and the short-term moving average is under the slightly longer-term moving average, and especially when it's red, you are presumptively looking at a downtrend. Where do trends go wrong? When they enter into areas like this, where this is a value area extreme. This is like a value trade. The value here is for sellers, people who bought down here. This is new highs above here. This is a great area for selling. So even though we're green, even though we're above this on trend in terms of the value area, and you know, we had declining momentum and all that kind of thing as well. You can see here the divergence, and you know, momentum goes red before price moving average goes red. Because it's a value area, you have good reasons to go short. Another value area would be when we went into new highs above here. Yeah, it's a value area. That was a value sell. You didn't get much for it, but it made sense. Even though you're green, even though you're presumptively in an uptrend. Then what do? Well, you say to yourself, well, we've moved down from the value area. Hopefully we've taken some profits. You know, we've put in something like a positive reversal. You know, momentum stays green. Whatever your appetite is. And then you flip again because presumptively the trend is up, and then you're taking buys up until we can make new highs above another significant area. Or I mean, look, when we come in above here, this could be a value trade on a short basis. Look, you could sell this area and get that pullback. So there's value trades and there's trend trades. So trend trades would be just any kind of short-term pullback or anything that look promising as a buy opportunity on a lower time frame, and just going in a bit smaller and just keeping that up over time. Your value area trades are area trades. You would have an area that you would say, well, you're not just throwing a little bit on for every lower time pullback to establish trending positions. You're scattering orders in maybe a little more. You're sprinkling them in a little more heavily to capture an area that you think will be a reversal area. You know, here the trend is down, 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 down. There's, you know, the value trade is under here. It went quite some way under here. That might have wrecked you a bit. Also under here. Where was the previous buying? Here. This is where we came out of before. We went back in. So this really here was, you know, the further you go, the better the value gets. This here was your sort of deep value area. You would place value trades. On a shorter term basis, on a day-to-day, you know, every day when you know, log on, look at your charts, presumptively that we're going down, you would be looking for opportunities intraday to sell. Again, small positions with a view of them becoming swing positions, I suppose. And then either moving stops with the moving averages or selling to buy back in value areas, you know. So the idea with the trend trades being they're smaller positions, you're just trying to get them on whatever looks promising, counter trend intraday. And then value areas is just scattering maybe slightly larger orders in the value area looking for a reversal. So, you know, I mean, silver's a bad example for trend trades. Stocks are better for trend trades. You know, if the whole time that the short-term moving average was green and above the yellow, you were just every day throwing on a, you know, buying a small position whenever there was a pullback. I mean, over time, you know, that's, you know, that would have been very effective. But I wasn't trying to do that. I was trying to throw everything at the fucking wall. In essentially in reversal trading, always looking for the big reversal. It was just silly. It's no wonder I got destroyed. You know, even one of those times made it look well. And we're making new highs. There's a small momentum divergence. So, but again, we're presumptively up. So you would still be looking every day. You would open your chart and say, right, well, where could I make a small buy? You know, where can I make a small buy that I could look to hold for as long as I can possibly tolerate, until the reverse is the case. And the other thing, of course, with stocks is, you know, the stock market is you can look at your market internals and your breadth and stuff and say, well, it's still positive in this, that, or the other measure, and that gives you more supportive reasons rather than just saying, oh, it's up, it's green, you know, to buy as well as that fact. So that's what I'm going to try and do going forward is buying with trends, whatever that may be, and buying and selling, you know, value areas. That's a dangerous thing to do in silver, I suppose, because of the size of these wicks. So I suppose one wouldn't be doing it on the basis of the daily chart. You'd just take the whole thing down. You'd scale the whole thing down a few times frames to where you're looking at like smaller areas, and you know, you would adjust your risk tolerance, I think is the idea anyway. But anyway, so I'm in silver from somewhere down here, and oh Lord, it's got to be time. It's got to be time for something good. Stocks just keep going up. Yeah, I'm in the euro. You could see the move coming in the euro. The sort of market correlation business. There's your short-term divergence. There's your longer-term divergence. Of course, if you're trying to take this the whole time, if you're trying to buy from here, you know, that was a pretty brutal experience. Unless you could hold all the drawdowns. You know, if you were psychic and knew that it wouldn't just keep drawing you down. And you know, you've got things flipping green, more divergences, momentum going green, price going green, and where did we come? We came into a value area, you know. So that was another reason that gave me confidence to go buying silver. S&P. Look at that. But look at that. You do it like that, it looks crazy. You do it like that, Yeah, it looks okay. Steady uptrend. One thing on half my chart is indicators, so you know, if we blow it up to we maximise price, it'll look crazy again. See? It's all about perspective. That looks a lot more reasonable, doesn't it? And there's the daily pivot. You can see where it reversed to the daily pivot and closed. And closed to annoy people. Right there. Right there. Boom! And look at that. Beautiful. Stock scope is my take. Presumptively green for go. Here's the dollar. Yeah, looks alright. For the more downside. You say something looks alright, people immediately think it's healthy. Alright means healthy, means good, it's going to go up. But it looks alright for more downside, I think. Hopefully. Hope. Well, like I said, it doesn't matter if the dollar goes back up and, you know, silver. My position is in silver gets stopped out, that won't matter even slightly. So I looked at uranium, the FTSE. It's just, again, it's a mess. Look at this box of mess here, just these wicks. Every time I look at it, I complain what a mess it is. I'm not sure there's a whole more bunch to say. Gold had a good day, but if anything, it looks like it's gone so much farther than silver. I mean, look at the, you know, we took this double bottom, shot right back up. But now we're going to be coming up into, you know, this whole thing up here, above these wicks and this other little pennant that led the selling. Very rapid selling from here. So maybe it's take a rest time, or maybe, well, it's quite a big move, isn't it? So like, can you have a 10% move up like that? Almost like a 10% move in one trading month. Less than one trading month. Maybe needs a rest. Yeah, maybe needs a rest and a pullback. Not too much more to say. Let's leave it there.